In a recent interview with TASS, Russian Finance Minister Tuliannov revealed Russia's intentions to seek renminbi loans from China, sparking widespread attention. In today's global political and economic landscape, Sino-Russian relations are closely watched, with renminbi loans being a key issue. Why did Russia choose to borrow renminbi from China? This move reflects Russia's response strategy to Western sanctions and how it might affect economic relations between China and Russia. What impact will renminbi loans have on Sino-Russian trade and regional stability? Especially against the backdrop of current international turmoil and frequent trade frictions, will this move alter the regional economic landscape and power dynamics? Can renminbi loans solve Russia's economic challenges? Perhaps more importantly, will this measure make Russia more dependent on China, thereby triggering other geopolitical risks? According to reports, in September of last year, Russian media revealed that an official mentioned the possibility of the Kremlin borrowing from China to promote the development and investment of infrastructure projects in the Far East. Although there are no specific details, the news suggests that Russia is prepared to borrow from China for infrastructure investment. However, as of now, Russia and China have not announced any relevant loan agreements. The news also indicates that during wartime, the Russian government faces significant pressure on its finances. Last year, the defense budget was adjusted to exceed $100 billion, equivalent to spending $270 million per day. Reports indicate that the Russian government has emphasized Russia's good GDP and development status, with President Putin announcing a 3.6% year-on-year GDP growth in 2023, higher than the global average and most industries unaffected by sanctions. However, US media believe that this growth is mainly due to the expansion of the military-industrial complex and has not flowed back to the public. On the contrary, the Russian credit market is active, but the standard of living has declined. The number of people holding 3 or more loans increased from 8.7 million to 11.2 million within 18 months, and bank loans far exceed economic growth. Russian Finance Minister Tuliannov stated that Russia is discussing the feasibility of introducing renminbi loans with China because budget regulations allow for the introduction of renminbi loans. Discussions began last year, but consensus has not yet been reached. Russian media claimed that the renminbi has become a hard currency in the Russian market, with a high rate of currency exchange between the two countries and renminbi accounting for a quarter of Russians' foreign currency savings. In this context, it is convenient for Russians to use renminbi domestically, and almost all banks can exchange it. According to currency experts, the mentioned renminbi loans may be issued domestically in Russia through bank cooperation channels to alleviate the debt pressure on Russian people. Regulatory agencies have shown concerns that banks are unstable due to the expansion of private loans, fearing they won't be able to recover high-risk loans, and the central bank dare not issue more loans. Russia is considering introducing renminbi loans to ease the pressure on central bank debt credit and help banks invest in defense and other areas. However, some warnings suggest that China needs to pay attention to the issue of Russian debt default. The urgency of cooperation on the Russian side may be related to social instability caused by the reduction of private loans, especially after the central bank restricted high-risk debt, leading to outbreaks of default waves in many places, and the market needs funds to relieve pressure. Western sanctions against Russia have exceeded 10,000 items, but have not achieved the expected results. Russia's economy declined by 2.1% in 2022. But grew against the trend by 3.6% in 2023. There are 3 reasons for this. First, Western sanctions are not iron-handed. The EU sanctions against Russian oil are limited to prices and not a complete cut-off. Whereas, against Iran, due to the possibility of replacing with Russian oil, dared to block oil imports. During the year of blocking Iranian oil, Germany accelerated the construction of the Nord Stream 2 oil and gas pipeline. But now the pipeline has been destroyed, leading to the EU simultaneously cutting off Russian oil and Iranian oil. After consultations, the EU unanimously decided not to purchase crude oil from Russia at a price exceeding $60 per barrel. But will this bring profit to Russian oil? In fact, the break-even point for Russian oil is about $40 per barrel. Selling at $60 per barrel can still make a profit of $20 per barrel. The most difficult period for Russian oil was in 2020, when Ural's crude oil prices plummeted to $42 per barrel, or even briefly dropped to $28 per barrel, due to the global drop in demand for crude oil and the impact of increased production in the United States. Between 2019 and 2021, the price of Russian oil was mostly above $60 per barrel, and the Russia-Ukraine war pushed international oil prices above $100 per barrel. Although Russian oil is now sold at $60 per barrel, profits have still increased compared to 2020. Second, the Russian economy is structurally single, mainly relying on three major industries: energy, weapons, and food. With the decrease in dependence on military industry exports, energy and food have become the pillars of the Russian economy. Energy exports account for more than 60%, while exports of other industries are relatively low. Therefore, it is crucial to stabilize energy and food exports to maintain the stability of the Russian economy. The problem is, in the case of Russia's structurally single economy, how to ensure its stability and sustainable development. In terms of energy exports, Russia has set its sights on the East. In 2023, Russia became China's largest oil importer, with imports exceeding 100 million tons for the first time, valued at $60.6 billion. India followed, importing over 85 million tons of Russian oil in 2023, valued at $45 billion, and purchased for $0.5 billion worth of Russian oil products. Gulf countries in the Middle East also cooperated with Russia to reduce production and raise prices, jointly resisting the United States. In fact, the most effective way to strike Russian oil is not price limitation, but increased production. In 2020, international oil prices fell below $40 per barrel due to oversupply, which is more threatening than the Western sanctions of 10,000 items. Why doesn't the West adopt this strategy? Because it would harm the interests of Gulf countries. Not only Russia, but also Gulf countries would suffer. Secondly, during the Trump era, the United States vigorously developed its oil industry, making it the world's largest oil exporter. U.S. oil giants are unwilling to increase production, and the cost of U.S. shale oil is similar to that of Russian oil. So even if Russian oil is losing money, U.S. oil will also lose money. And Russian food, as a hard currency, is easier to sell. Egypt, Ethiopia, Turkey, China, and other countries are major importers of Russian food. In this context, the West strikes the Russian economy by sanctioning Russia's international currency settlement system and limiting Russian oil exports. The West grasps Russia's foreign trade lifeline, strikes Russia's economy in international payment settlements, and limits Russian oil exports. As a neutral third party, unwilling to take risks, Russia has found a solution: cooperation with China to process renminbi. Buy loans. Renminbi loans have three major advantages: ensuring transaction security, promoting the internationalization of the renminbi, and maintaining the normalization of Sino-Russian trade development. Will this measure further promote the internationalization of the renminbi, and whether Russia's strategy is sustainable? Moreover, against the backdrop of Russia cooperating with China to process renminbi loans, will the renminbi play a more important role in international trade? Will Russia's strategy have long-term effects on its economy and international status? Lastly, I summarized today's video, hoping it has provided you with some inspiration and value. With Western sanctions escalating continuously, Russia faces unprecedented challenges in the economic aspect, and cooperation with China seems to be a possibility to get out of the predicament. However, this move has also raised many doubts and controversies. To better understand Sino-Russian trade relations and the impact of renminbi loans, it is necessary to delve into the motives and significance behind them. First, we need to consider why Russia chose to borrow renminbi from China. This not only involves the depth of economic relations between the two parties, but also reflects Russia's response strategy to Western sanctions. Second, what impact will renminbi loans have on Sino-Russian trade and regional stability? Especially against the backdrop of current international turmoil and frequent trade frictions, Will this move change the regional economic landscape and power balance? Finally, we need to examine whether renminbi loans can solve the economic challenges facing Russia. Perhaps more importantly, will this measure make Russia more dependent on China, thereby triggering other geopolitical risks? Through in-depth thinking and analysis of these issues, we can gain a clearer understanding of the complexity of Sino-Russian trade relations and the potential impact of renminbi loans on regional and global economic patterns. In this era of challenges and changes, understanding and responding to these dynamic changes are crucial as they will profoundly affect future development and cooperation. The United States may hold different positions. Generally, the United States may adopt a cautious attitude towards the close cooperation between Russia and China, because such cooperation may enhance the influence of these two countries in international affairs, challenging the US's dominant position globally. Additionally, the United States may also be concerned that Sino-Russian cooperation may exacerbate regional tensions, such as triggering new geopolitical competitions in the Asia-Pacific region. However, the United States may also be pleased with Russia seeking renminbi loans, as it may reduce Russia's dependence on the US dollar and mitigate the impact of US sanctions on the Russian economy. But this pleasure may also be accompanied by concerns, as it may further strengthen China's position in the Russian economy, making Russia more inclined to cooperate with China geopolitically rather than with the United States and its allies. Therefore, the United States may hold a complex attitude toward Sino-Russian cooperation, feeling both pleased and having certain concerns. Feel free to share your thoughts in the comments section. That's all for today's video. See you next time with more exciting content. Bye bye.